Will be. Hi, everyone. Welcome to the Symposium on Fintech for Personal Finance, the first ever symposium of NUS Fintech Month 2022. I'm very glad you're joining us in kickstarting this program and the year. I am your moderator for this panel discussion, Yosu Shane, and I'm the head of partnerships at NUS Fintech Society, the organizers of NUS Fintech Month. Here's a really quick rundown of our discussion this evening. I'll first begin by introducing our distinguished panelists. Then in the first segment, we'll talk about a broad overview of the personal finance market, and this to give us much needed context for such a complex and interesting space in fintech. In the second segment, we'll talk strategy and dig deep into how each of our panelists' companies are understanding their place in the personal finance space. In the last segment, we'll talk about predictions for the personal finance space and beyond, and hopefully get a peek into the future. So our panelists who have very kindly joined us today and I'll go down in alphabetical order. Firstly, Amanda Ong. Amanda Ong is the country manager of Singapore at Stashaway, a digital wealth manager that personalizes financial planning and portfolio management for both retail and accredited investors. Deepak Khanna is the head of wealth and trading at Revolut, a company that's building a financial super app for everything from savings to payment money transfers. Ignaeus Terenis is the head of communications at Bybit, a global cryptocurrency exchange. Gavin Chia is the managing director of Futu Singapore Mumu, an international digitized brokerage and wealth management platform. So with that, we've got plenty of interesting things to explore with our distinguished panelists this evening. So let's jump straight into the questions. Question 1 on market overview. Let's recap 2021. What has it been like for the personal finance fintech space? What were some memorable highs and lows? Let's start with the highs first. This is open to anyone.
Maybe I'll just kick it off since alphabetically as well. So I think, 2021 has been a very exciting year. I think we saw definitely a further acceleration to digital that really began in 2020 with COVID. For us specifically, some of the memorable highs is, we actually launched in 2 countries last year. So we launched in Hong Kong and Thailand. We also launched a couple of new portfolios, our new thematic portfolios, which we've seen a lot of interest and traction in a very few short months. And obviously we did all of this kind of, with the country launches as well as launching of new portfolios, entirely kind of working from home, having to coordinate across countries in a very remote setup. So I think that was quite an exciting time for us and one of the more memorable moments.
Yes, maybe Gavin here, maybe I'll just share a little bit more, a little bit similar to Amanda. I mean, Futu Singapore just started somewhere around 8th of March last year. So I got to say it's a very exciting days. I got to say it's, right now currently we are doing so many more things right now, and I got to say it's just as of today, we actually have more than 500,000 clients just residing in Singapore. So I got to say things are very interesting, and if you can observe, I think I'm the only one with a lot of white hair. So yes, look forward to sharing more with everybody later. Yeah.
That's very interesting. So both Stashaway and Futu Singapore have started in these, I'm sure we're all by now very used to, in these very unprecedented times. What is that like, starting new ventures, embarking on new initiatives in such a period of uncertainty? Are there any business or economic or political trends that are headwinds or tailwinds in this period, when you are, especially when it comes to starting new things?
Yeah, maybe I'll go this time. First of all, big thanks for inviting me over. It's a privilege to be here and joining the dais with so many people here. So taking the question that you just asked and the one before in terms of the key trends, I think the number one trend that stands out for me is the rise of the retail investor class. So if you've seen last year, there has been a big rise of people who are simply trying to say that, give me the right tools and I want to take power or take charge of my money. We've seen that with stock trading. We've seen that with people getting into digital assets like cryptocurrencies, etc. So that's the number one trend that I think that stands out. Amanda touched upon COVID and how that's impacted people. Obviously, negatively, it has taken a toll on lives, health, and economy, but it has also forced people to go more digital. So when it comes to accessing your banking services or financial services, more and more people, across a different age group, experience brackets are now looking at digital adoption. The third, I think, is the regulatory oversight. I think there is a good involvement that's happening in terms of the new asset classes. Different countries are looking at digital acts, the payment landscape, and I think that's all regulating the industry as well as building onto the industry.
All right.
Yeah, I think.
Sorry,
Yeah, I
Ignace.
think that would be a very good segue to. Sorry, yeah, I thought that would be a very good segue to talk about cryptocurrency. Of course, the pandemic has been very challenging for the people who are actually on the front line and for people living their day-to-day lives. But in a way, it's kind of like for those of us working, in the fintech or like the crypto space, especially most of our services provided online. Purely from a business point of view, it's actually been great. We had about 300 employees at the beginning of the year. Now beginning of 2021, now we have 1,500. Our user base grew by 5 times. 2020 was the year that we first time sort of like crossed the 1 trillion mark in terms of all the trades kind of like combined, executed on our platform. And then we did more than that in Q1, and by Q4 we processed more than $1.7 trillion worth of trades in digital assets on our platform. So in terms of business, it's just kind of like it's almost just a straight line up. And in terms of kind of like the overall trends in the wider market, we obviously see like as Deepak correctly pointed out, like the rise of the retail class, because they have so much time. And then because there's too much time, too much kind of money slushing around as well, there's this piece of data that people often refer to, that 40% of the US dollar in circulation are printed after the pandemic started. So you basically have a huge deluge of money just chasing return on investment all around the globe. And in our case, crypto, it never sleeps. So, if you're going to a bank, you're going to a wealth manager, like they are not going to serve you on weekend. They are not going to serve you after 4:30 p.m. Whereas crypto is somewhere you can basically get exposure all throughout the day and night. And it's really like you can find the liquidity from all over the place instead of just focused on one single jurisdiction. We are seeing like regulations all over the place, and there are a couple of them that are pretty harsh, but by and by we really see that, especially kind of during the recent congressional hearing that 6 crypto CEOs attended. We're seeing that regulators actually starting to embracing this idea that people actually want this, and this is an emerging asset class. Well, it is a risk asset class for sure, but it is something that people want, and they should rather be thinking about how to ensure that investors are protected and ensure that innovations happen onshore instead of regulating out to some other countries.
All right, very interesting. Yeah, regulation is definitely it's definitely a key element in the fintech space, especially when it comes to personal finance. We've seen both the rise of cryptocurrencies, which entails the rise of regulation and more scrutiny on the asset class, and also, as Gavin mentioned, a growing retail investor class, and so regulation will necessarily be even more relevant in trying to protect them. Speaking of innovation, what are some key problems that each of you still feel is there, and that fintech innovators, it's there for fintech innovators to step up and solve?
Maybe I'll go first. I just want to share a little bit more. Is maybe for that questions, I was skewed towards a little bit more towards in terms of the brokerage industry over solely right now in Singapore. I got to say is I totally agree with most of the participants over here. It has been a year for retail clients, And what I observed in, especially even the retail clients, and especially what's more for Futu, just solely in Singapore, 80% of our clients ages 18 to 45. I got to say is, right now, how they are looking at things, a lot of them are doing self-trading. And a lot of if you still remember in this market, there are still reminders. I got to say is, I'm seeing this group of people, there's a huge tilt towards doing self-trading. Maybe due to pandemic, but of course, in terms of step up and solve is, how I personally feels is that, it's not only in Singapore, even in the region, that solely for Futu Singapore, if I want to skew towards on the trading side, there are so many products and there are so many technology that we can bring in. And I believe that, how can we actually, accompany clients in their investment journey? And, what I'm trying to say is, especially for these Gen Z clients and the millennials, it's so different as per what, when I'm seeing how my dad and mom, especially my dad, how they are doing trading last time. So surely, I mean, there are, how, clients right now in terms of how they can actually go about doing. Surely Futu, there's a lot more things that we can contribute over here. Yeah.
Maybe I'll go next. So, I mean, to be honest, I think at least in Singapore, the digital wealth space in general is relatively competitive already. So, Stashaway, there are a couple of other players as well. I do think there are still other opportunities in other Southeast Asian countries where there is, similar to Singapore, a large amount of people's savings that is held in cash, that is uninvested. So I think, obviously with a lot of these markets, you need people with a lot of local knowledge, the ability to build strong relationships with the local regulators, and a good understanding of the audience to be able to build a successful and relevant offering. And I guess that's more for the digital wealth space. But more in general, I think if you look at just the fintech space in general, I don't think there are many firms out there that is really solving the lending problem. It's not a space that we're in specifically for Stashaway, but I think it is still a space that is very much dominated by the banks, where the processes are actually quite inefficient, and also the cost is quite high to the end consumer. And we don't really see a lot of kind of fintech firms in that space yet. So I think that's something that might kind of come up over the next couple of years as well.
It's very interesting. Deepak, Ignace?
Yeah, Shane, if I can go next. I think two things I like to call out for. One challenge, and by the way, fintechs have done very well in personalizing their offering to end clients, be it the younger segment as well as the different age brackets. But I think personalization is going to be an area to solve for, and will continue to be an area to solve for. How do you make sure that you are relevant to the end consumer? And mind you, for a lot of the fintechs, the base is changing dramatically. It's growing at a very fast pace. So the people who are banking with you, or who are availing service, not banking, but availing services from you in the past, may be very different from people who are availing services from you in the future. So how do you stay relevant to them? How do you personalize yourself to them without over commoditizing your offering to make it sound too simplistic that you can become a millionaire overnight, or making it too complicated to even not get into investments or any form of financial services for that matter? So I think personalization is going to be key. The second I would say is talent. There is a growing demand to grow the business here, an appetite for end users to do things themselves. The supply side is the one which has to really come up. And I think Amanda touched about, being connected in the region and, having the right skill sets. I think that's going to be the other area that has to be solved.
As for me, I think the biggest challenges with sort of the technological advancement innovation is not necessarily with the our industry or our sector, but rather with the incumbent and the legacy. So one thing that you see sort of for these kind of for our experience is that the biggest bottleneck when it comes to kind of any transactions or any movement of capital funds, the bottleneck is always residing with the banks, with your T+2 day of clearing houses and like all that. And like when people talk about kind of like, at the beginning of the year, we have the GameStop phenomena that happened on Robinhood, and then like the platform couldn't handle the volume and had to close down. It wasn't actually that the platform couldn't handle the volume, but Robinhood, like as a fintech app, it's more or less kind of like it's very nice. It's very beautifully built, and it kind of like aligns with the aesthetics with all the other smartphone apps that we have. But for the trades to really go through, once you buy something on Robinhood, first of all, you're buying options, you're not buying the stock itself, but then it needs to go through, a bank, a clearinghouse, the exchange itself, and then all those, the plumbing, and like much of fintech, the plumbing is still in the traditional banking sector, which is inefficient and costly and has a lot of problem with layers. You need to go through like 7 or 8 institutions to really just do a simple trade or move your money from one jurisdiction to another. Whereas, there's this interesting phenomena that's actually not new, but kind of like gained quite a lot of traction in late in summer 2020 and still continue to go on, is called decentralized finance. So you basically are rebuilding everything of the traditional finance from ground up. You can do lending, you can do borrowing, you can do even this flash loan that you can borrow and repay huge sums of capital in the space of one block time. So basically that's 10 seconds for the Ethereum blockchain. And then you're able to capitalize on those arbitrage opportunities. And then it removes any threshold. So to open a bank account, you need some sort of like, you need like $1,000, you need some sort of credit score. In decentralized finance, all that you need is just to have enough collateral, and then like you can have something that like the ticket size could be as little as $1. So all those innovations we're seeing is like actually happening, and then you have different kind of like other layer 1 blockchains and layer 2 roll-up solutions that really help to solve the throughput problem, which is just something innovation and some sort of like problem, some sort of this thing that you do not see traditional banking system take. And really about crypto, kind of like talk about onboarding new users. The problem is always with the banking system could not handle the volume. The banking system is the biggest bottleneck. We're actually seeing just from our own experience and talking to people who work in traditional finance, people who work in fintech. Basically, all of their most of their clients want to have crypto exposure, but banks either do not support it, or they say, "Oh, our charter or the local jurisdiction do not allow it," and then we see this huge kind of like pile of investors basically are held at the door.
Very interesting, Agnes. So on that note of decentralization and the DeFi summer we saw in 2021, how do centralized exchanges like Bybit or this goes to Futu as well, how do you see decentralized finance? How do you relate to them? Are these complementary? Are they collaborators, or are they competitors?
Gavin, you want to go first, or shall
I? Sorry, Gavin, I think you.
Apologies. I mean, yeah, Ines is, yeah. I mean, sorry. Sorry, can you just repeat the question again?
Sure, no problem, no problem. Yeah. So we've seen the rise of decentralized finance, and it's becoming very popular and growing in utility every day. Yes. Do you see the rise of the ascent of decentralized finance as as competitive with your centralized exchanges and centralized services, or do you see it as collaborative, complementary?
Yeah, this is I got to say this is a very good question. As much as how I see it is I got to say it complements each other. I got to say if we want to put it on very generally in terms of products, a lot of people are talking about crypto, but how I see it is it also depends, because when we talk about regulate, in terms of such things, generally we can look at blockchains. How I personally feel there's still a lot of things that even for Futu, as much as, yes, we route the orders towards the exchange. There's a lot of sequential, but I got to say right now with technology, I got to say to do a trade is like 0.0037 seconds. So I got to say even for eyes, you can't really see it. But of course, it doesn't mean that on the other side, there's it's not that it's either good or bad. I got to say as a fintech provider, as a fintech brokerage, we embrace both sides. And we always use the positive and the good sides, to better service our clients. So that's how I look at it. Yeah.
Yeah, so for much of the decentralized finance, you have people who are being the custodian of themselves. They no longer need a centralized provider to kind of like keep their credentials and do all that. But that, again, it still currently requires a lot of technical know-how, and it's not really that user-friendly to vast majority of the population. You are seeing like early adopters, people who are familiar with programming in Solidity, people who are able to discern the requirements as well as the content of a smart contract. Those people are, of course, the early adopters. I think when we will truly see like decentralized finance maturing, growing up, is that you would have a user experience that kind of like really aligns with people's expectation. At the moment, it's still very hard, but that kind of like is something that is something that centralized exchanges or centralized service providers can work with decentralized partners to provide together. So with Bybit, currently we are exploring opportunities to incorporate non-custodian wallets. We are invested in several of decentralized apps. And we think, for really any centralized players, they only ignore this trend to their own peril. Even though vast majority of the people nowadays, they still like to have customer support. They still like to have someone to call when something goes wrong, or they still like to have that veneer of authority to kind of like guarantee whatever their investment are or whatever their balance is. But I think centralized exchanges, centralized finance should really look at what DeFi has been doing and what the promises DeFi has been giving people. And like if we want to kind of like go a little bit further, talk about NFT as well. If you are having kind of like, if you are truly minting and trading NFT, then you probably are doing it in your MetaMask wallet or one of those non-custodial wallet instead of doing it in a centralized way. And it is important for the centralized players to really see that and think of ways that they can improve upon what they have in terms of throughput, in terms of time elapsed, in terms of like delayering, and really make things simple and straightforward. But I do think, at least in the short term, it's a complementary relationship that both sides can learn a lot from the other.
All right. And Deepak, we can't talk about crypto without talking about money transfers and the global payments, financial infrastructure. There's been a lot of talk about how sending money, payment rails, these are very broken down and we need to innovate on them. Do you see the cryptocurrency's utility as a way of sending money more cheaply, more efficiently, or at least reputedly more cheaply or more efficiently than traditional ways? Do you see this? How do you understand this this perception, as well as how does Revolut intend to approach this trend?
Yeah, I think first of all, I want to clarify that we are still in the midst of launching the service, so we don't have it as of now, at least in Singapore. But clearly, definitely, I think you spoke about the rails, which is there for remitting money. Revolut has been at the forefront of leading the space, being able to allow a person to send money, receive money. And a lot of the audience here is young population, who may have come into Singapore for studying or who will go abroad to work. So it solves for a lot of the payment solutions which are there in a very low cost efficient manner. Now, whether crypto becomes a conduit of that, so clearly, we will be looking at offering cryptocurrency when it comes to our client base, to be able to trade in them, to be able to buy cryptocurrency, and to be able to send cryptocurrency to one another. But in terms of use case, how it involves, I think we have to wait and watch this space in terms of where the use case applications will come in.
All right. Amanda, so we've heard a bit about the rise of the retail trading class, and especially in COVID, and this I can say from personal experience, from what people in my generation, or like my cohort, are talking about. There's been a lot of interest in participating very, very actively in the capital markets. How do you think this relates to StashAway's approach to investments, which is perhaps more measured, less caught up in fads or rushes, and perhaps more long-term in terms of time horizons?
Yeah, so I think we saw definitely the dangers of meme stocks happen quite a bit over the past year in particular, right? And I think because of the rise of a lot of trading platforms, it's obviously made it much easier for people to get started with investing. And at the end of the day, it is a great way for people to make the most out of your savings, right? Whether it is through Robo Advisor, digital wealth manager, or trading yourself through a trading platform. Putting your money to work at the end of the day is the most important thing. For us, the way we view it, at least, is that not everyone wants to trade themselves, right? Not everyone has the time to do so, and not everyone has the expertise to be able to do so. And there are a lot of people that have day jobs or are like yourself studying full time, and you prefer to kind of spend your free time doing other things, right? And so for us, we are that fund manager that helps our clients manage their wealth. We do the rebalancing for them. We do the re-optimization for them. Obviously, if you are managing the portfolio yourself, all of this you have to kind of manage, right? You have to know when to rebalance. You have to know whether you want to get out of certain positions at the right time. And if you look at research, and we talk about this quite extensively, if you look at research of the past 15 years, active fund managers, so people that they are professional investors, they do this for a living. The majority of them actually do not beat their respective same risk benchmarks, right? So if the professional investors are struggling to be able to do so, it says a lot, obviously, also for the retail investor. So at least for us, we try and take an approach of using ETFs, and we kind of manage it for our clients, and so that they can focus on what they want to do, or what's most important to them.
All right. Great answers, everyone. We'll move on now to our second segment on strategy. We'll lead first with a question that I'm personally very, very interested in hearing answers on. And this goes to both of the exchanges that we have with us today, both Futu and Bybit. How do we see these exchanges or trading platforms? How do we see competition in a crowded space that's offering users increasingly lower commissions? How else to compete other than through offering cheaper commissions?
I think in a way, like at least for us, we haven't really seen that race to the bottom scenario, because at least kind of speaking for personal experience as well as from kind of like the data we are seeing, in terms of like, even though it feels like crypto is really mainstream now, or like it feels like everyone and their aunt is talking about it. When you look at global penetration, like only a little more than 3% of the global population have had crypto exposure. Of course, that number is far more substantive when you talk about countries like Ukraine or Nigeria, where the inflation and the unemployment number just makes it impossible for people to keep their hard-earned money in fiat money. Well, if you're talking about kind of Bolivar, then like of course like so really it's more about kind of really addressing the problem, and then taking on the incumbent, the traditional banking finance system. So we can also see it from the inflation number. Even the US is posting like 6.8% in the latest number. And when sort of like US prints so much money that everyone else picks up the check, and really like you would see like virtually in every country the inflation number is quite substantive, and we are in an inflationary market. So people are increasingly going just kind of leaving the banks, which offers like 0.1% of return, or just like even you have 4% return. If the inflation is 6.2%, then you are making a loss. You are losing purchasing power. You are not actually kind of like saving your hard-earned labor for the next generation, or really just the next year. So we haven't really been competing that like ferociously with kind of like the other exchanges in the crypto space. It's more or less kind of like we are trying to get outside of our existing audience and address a much larger kind of like potential client base that's basically just sitting on the sideline because of regulation, because of like the scary news headlines, or because like they haven't figured out a way. But the demand and the desire and the total addressable market is very clearly there.
Yeah, that's very interesting. A local book publisher once told me that our competitors aren't other book publishers. Our competitors are the people who don't read, and yeah, that's definitely something that that promises a lot more growth. Gavin, any thoughts?
Yeah, sure. I mean, if you ask in terms of commission-wise, I could say, I think this is especially true over on the brokerage side. I think in Singapore brokerage, I mean, I even have some news that there will be more fintech brokerage that is joining Singapore soon. I mean, I can't really disclose the name, but there are more competition surely for how I'm going to see in the upcoming months or years. But surely this will be good for clients. But how I'm looking at it is, in terms of a full-tool model, I mean, I'll even like if you compare in US like Robinhood, I got to say, or even our closest competitor Tiger. I mean, if you look at generally, I mean, commissions can be low. It's not because that exchanges has ramp up the cost to us. I got to say, if you look at based on statistics, for the past 40-50 years, commission even for trading for Singapore market, it has been quite high. I think it was during my mom's dad's time was 1%, and right now it's 0.27 something percent. For us, we are still in the money, even though we charge just like $2.49 minimum for just trading Singapore. Of course, in what we are trying to do in terms of how we look at it is how can we I got to say in another point is because we embrace a lot of technology. For every 10 of us, actually 7 are actually working in IT or R&D. So if you look at Futu, we have a strength of around 2,500 people. So 70% of us are all in IT. I got to say I'm the rare one. I mean, I'm the 3 out of 10. So that's how is another way that we keep our costs super low. So we constantly think of ways how can we innovate or reach clients just by embracing technology. So of course, we are also along the way, another ways of, it's not about just commission only. I mean, how we look at it is we are also the main placement agent, and it's also the underwriter for one of the SG, SG counters. Interestingly, they are doing Trace Together. And, I got to say, Futu, we are proud because in this, pandemic times, at least we are helping a firm to raise funds. And they are doing this to make, to make into a better technology for into a better Trace Together or even better tools for everybody to make sure that COVID-19 is actually being kept, I got to say, in terms of the numbers, significant low in Singapore. So I think generally, I mean, for Futu, we are always thinking of using technology and how to, bring the price low, but yet, there'll be quality in it. So that is how we look at it. Yeah.
Yeah, you did mention in several media interviews that out of every 10 employees at Futu, 7 are in R&D work. So
right.
Technology is clearly something very dear. Deepak, bundling is very clearly a very it's a big USP of Revolut's product and a very useful one. What do you think the benefits of bundling are? And a question I had was, there are certain markets that are famously more famously very fond of super apps, of bundled products, for instance, the Chinese market. How does this factor into Revolut's strategy?
Yeah, Shane, if I step back, at Revolut, we aim to empower the end customer in the path to gain financial freedom, right? And in that bargain, we're talking to a large segment of clients who are, let's say, beginner investors, who could be experienced investors. And in order to do that, you need to have different products which can take care of or cater to different clients. So therefore, our strategy of financial super app, which means all things money in one place. We feel that that's one of the great value proposition. And it links back to your previous question in terms of, can price be the only way to sort of get clientele? I think the answer is also in terms of the value proposition of convenience. So Revolut, you can send money, you can receive money, you can do currency conversion. And we know that Revolut is quite well known for attractive FX rates. People who are very close to sustainability, ESG donation, you can donate money out of Revolut. You could also be looking at, managing your kids' finances through the junior account proposition, and very soon we're looking at investing or wealth management from Revolut, which is investing in stocks, commodities like precious metals and cryptocurrency. Now, so that super app basically brings together a convenience factor to the end client there. I just want to clarify on the word bundling you said. I think bundling, we don't want to associate with the word bundling because it somehow makes you feel that you have to take up product A to get a deal at product B and stuff like that. If you're in the Revolut platform, Revolut app, if you just want to use it for sending money, you could do that. For FX, you could use that. For stock trading, you could use that. So therefore, it's more of, giving that choice of freedom of choosing what you want to do rather than forcing people to do something or the other. Shane, if I can just come back to the previous point about low cost, I clearly feel that low cost is not a bad deal as long as, as Gavin said, it's coming out of innovation and, you should be able to pass it back to the client. I feel I would like to phrase it as value creation for the end customer. So at Revolut, we believe that we give value back to the client, not just in terms of costing, but also breaking the barriers of investment. We know that investment has been associated with, putting 100,000, 200,000, $1 million with a wealth manager before you get any form of quality advice or a platform where you can trade easily. With Revolut, we will be able to offer clients on a fractional basis, $1, and therefore you're literally trying to use low cost and the low barrier to let clients have greater value out of the platform. So yeah, that's what I would like to say.
Very interesting. Yeah. Amanda, so we've talked a lot about how there are a lot of very interesting, perhaps more glamorous and sexy trends that are capturing the imaginations of the younger in the demographic spectrum. Stashaway's core market is in the 30 to 45 year old range. What does Stashaway see in this target segment, and what is Stashaway's vision for user growth?
Yeah, so our target audience are typically people within the ages of 30 to 45, working professionals. These are usually people that have accumulated, a decent amount of savings over time. So they've been in kind of working for a couple of years already and have accumulated a good amount of savings. And typically, what we see is that a lot of them obviously keep these amounts in cash, right? So what we're trying to solve is obviously help people move those funds that is just kept in savings accounts, doing nothing. So just to share actually, to give you an idea of the percentage of kind of financial wealth that is kept in cash in Singapore, the percentage is about 37% of financial wealth. If you look at North America, the percentage is actually 12%. So a large part of financial wealth in Asia and in particular Singapore as well is kept in cash. And obviously, what we're trying to do is help people move away from that a little bit. We do have the full range. So, our youngest client is obviously, 18. That's the minimum age to create a Stashaway account. Our oldest client is age 91. So we definitely have that full spectrum. But I would say the largest client base is people within the ages of 30 to 45, because these are typically the people that have a good amount of savings and are then, kind of putting it to work or looking at a platform to put it to work essentially. And that's where we come in.
Right. So in a lot of financial services products, we see like financial literacy being one of the first few hurdles in increasing user adoption. But for products such as Stashaway's, where your target market is in the 30 to 45-year-old range, would it be less of a problem in terms of financial literacy and more in terms of technological literacy? And how does Stashaway help to bridge that gap between like people who are not so well versed with accessing financial services through their mobile phone, for instance? And the second part of my question is also, maybe we'll go with that one first.
Yeah, no worries. So, financial education has always been kind of a key focus for us, right? So, back when we first started, we have always done kind of in-person events We've done seminars relating on kind of financial education topics about personal finance and investing. And then in a lot of these seminars, we see the full range of age groups, right? So it's not just kind of your people in your 20s, but we see kind of working professionals in their 30s. We see people, retirees join us for those events as well. So I think it's not really an issue of helping people understand that, or kind of the main barrier is technology. I think it's in general, a lot of Singaporeans are very used to putting their money either in real estate or insurance products or in cash. And so where the financial literacy comes in is helping educate them that, first of all, you shouldn't be putting your money in cash because it's losing money every year to inflation and you're earning next to nothing in interest in the banks. And helping people understand kind of what are some of the high fee products that they might be exposed to and what are some of the alternatives. But when we do a lot of these events, we don't put the focus on stash away. So we actually don't talk about stash away until the last 30 seconds. The entire focus of it is on the educational content itself. And I think that's the most important thing. For us, the way we view it, at the end of the day, if we have a more educated client base, it works out for us, right? People that understand investing for the long term is good. Whether they end up investing with us or any other player, it still works out for us. And that's something that, it's a big reason why we've always had a big focus on financial education. So these seminars and webinars, we continue to do it on a weekly basis. We actually have these same educational content on our app available for free as well. So like people don't actually have to invest with us to gain access to it. So yeah, definitely, something that we think is very, very important.
Right. Yes. You reminded me of what I wanted to ask was it's talking about the Singapore context. Do you think the barrier to getting more people in the region or in our country particularly to move their money away from, say, more traditionally risk-off assets into other ones, do you think this is a cultural issue that we are generally more conservative, especially in the older age groups, and how can this be surmounted?
I think I think people in general are always scared of the unknown, right? And you essentially don't know what you don't know. If you don't actually go out there and are exposed to a lot of these new offerings, what's foreign to you becomes scary. And what we try and do is to make sure that we, being a very digital platform, if you don't want to talk to anyone at Stashaway, you can create an account, put in money, get your money invested without ever speaking to anyone from Stashaway. But what's very important for us also is to make sure that we have channels available so you can contact us via WhatsApp, via phone call, via email. We pick up the phone on average in 8 seconds. I think if you call bank, you probably put on hold for 15 minutes, right? So being as available as possible through all of these channels has been always super important, so that if anyone has any questions to kind of get started, we are definitely there for them. So I think it's more so of just kind of helping people understand what's available, because they previously might not have been super aware of it. And for any kind of fintech firm, I don't think it's just for people within a digital wealth space or firms within a digital wealth space. It's always about, when you are dealing with people's monies, it is about building trust. Right. For us back in 2017, that was the main kind of challenge that we faced. I think right now, people are a lot more aware of digital wealth managers. So for the newer players, it's a lot easier. But back, 4 or 5 years ago when we first started, that was really kind of the main challenge that we try and solve.
Right. Yep. Speaking about financial literacy education, crypto is a world in which I constantly feel like you feel like you're in a perpetual state of uneducation. Like things move so fast and so quickly that you're always just trying to catch up. Ignace, do you think that firstly, what are your thoughts on financial literacy education, and how can platforms like Bybit approach that issue? And also Bybit's platforms is offering, talking about alternative assets, is offering unique investment instruments, for instance, dual asset mining, DeFi mining, launch pool. How do you see people, your users, reacting to these newfound, maybe perhaps a little bit foreign instruments?
Yeah, thanks for the question. I think financial literacy is very important for us, and we spend a lot of time creating those content for people to learn about sometimes very simple concepts like, what is blockchain? How does decentralized ledger technology even work? And we understand that perhaps you don't want to get all your financial education from a crypto exchange. So we actually work with influencers, we work with esports players, we work with minor celebrities to kind of like talk to their existing audience in a familiar way, so that people find those information more palatable, and we kind of like get more mileage out of our sponsorships as well. And in terms of kind of like the overall customer behavior, because we serve customers all around the world, we actually see there's somewhat of a bifurcation between kind of like very, very general terms, but Western investors and Asian investors. For kind of like Westerners, they tend to be less technically savvy than their Asian counterparts, but because of kind of like the wide availability of crypto ETPs, and then now you have a couple of futures ETFs in the US as well, and then the habit to allocate household wealth to passive income vehicles, they tend to have this kind of like buy and hold like mentality, whereas Asian investors, so like if you're talking about older generation, they still prefer store value exposure into like physical assets like real estate. But for the younger ones, or like for those kind of like really like professional traders, you're seeing them go for really like risk on assets, but also trying their best to kind of like find market inefficiencies, and because of crypto market is still relatively young, so you can actually have a lot of arbitrage opportunities if you kind of like spot the moment. So you actually see a lot of that, and essentially we want to serve people of all levels of knowledge and skills. So what you said about those dual asset mining and DeFi mining, those may be slightly out of bounds for people who are just hobbyists or casual investors. They don't want to learn about how to kind of like how to be automated market maker in a liquidity pool, or they don't want to kind of like learn about concepts like impermanent loss. They just want their return to beat the inflation, or to have a better return than what the banks offer, and we provide just that. They can just buy into stable coins, which is pegged to nominally pegged to the value of $1, and it's much better return than you can get from any bank, or really most of the financial investment as well. And that is very attractive to many of our users who perhaps are not full-time traders, perhaps are not reading up on every piece of news, every tweet on the crypto Twitter. There's this saying that like if you miss crypto Twitter for a day, for the next 3 days, you don't know what everyone else is talking about. That happened to me when I took a vacation. But in a way, like we are trying to provide that service, so like it really lowers the barrier to entry, and we really kind of like use the most personable, most approachable way to provide that education using familiar faces, using good-looking motion graphics to really help people understand why this is such a opportunity they want to at least take a look on. Because what we truly think is maybe we may have just passed the Rubicon, wherein it may be riskier not to have any crypto exposure than to have it. So even if you're not a true believer, just because everyone is talking about it, might worth spending some time, or just putting a small allocation into it.
Right. Yeah, definitely. Deepak, user behavior, as we have heard, I think it's the one thing that we've taken away so far, is that user behavior is very diverse across different market segments and groups. Revolut is a one-stop shop for all money matters, and it's also a global company with products in many markets. So diversity is clearly a big part of what you do. How does Revolut think? How is Revolut thinking about user diversity when building products, designing features, expanding into new verticals, especially for a product such as Revolut's, which has to do with such personal habits, as you have observed, personalization is a growing trend?
Shane, it's a very good question, and probably I can combine it with the previous question on financial literacy as well. You're absolutely right. We're a global company. We got millions of clients who are using Revolut for their day-to-day banking, day-to-day financial services, investment needs, etc. And a lot of our customers are first-time traders to people who have been trading, let's say, in the past, but unfamiliar with the new asset classes, as well as people who are frequent traders. So we keep all that in mind. So there is obviously going to be a duty of care to make sure that you're building your product cycles which are relevant to all these clients. I think I can give an example of this in the form of, let's say, if you've been using Revolut for your card spends, we give you sort of a very rich analysis of your spending habits are, trying to make you understand your financial situation, how much you're spending in a month. You can do your budgeting tools, you can set alerts. You can even look at what kind of merchants you're spending on. So all this information is for you to sort of take charge and look at it. And imagine this kind of data engine being applied to other products as well, is what we think we can bring it there. If I combine that, I think it comes under the whole umbrella of financial education literacy. Often, obviously, financial literacy could be thought of as pure literature, things like inflation is not good and don't stay in too much of cash, etc. It could also be educating clients into the new product types. But when you apply such kind of data engines to give analysis back to your users, you are empowering them to see for themselves, how they've been performing, and to use that for better decision making. So I think that's what we're doing. One last point I'd like to talk about also in terms of user behavior is to, like I mentioned earlier, breaking the barriers. If you don't have the necessary experience level, it should not, or if you don't have the right amount of money, it should not stop you from diversifying your money into different asset classes. So if you have a platform like Revolut where you could start with as low as $1, it takes away the whole mindset of not trying a product on an asset class and test it out for yourself and then see whether it makes sense. Of course, everything has got its own risk factor associated with that. And therefore, we want to make sure that there are no barriers for people to understand products or to invest in them at some point of time.
All right. Yeah, that's a great vision to work towards, democratizing finance for everyone. Let's move on to now our third and final section, predictions. So this is a question open to the floor. What are your predictions for the personal finance fintech space in 2022? What are you looking forward to seeing, and where are we heading? What's going to be big? Or if not within the next year, within the next 5 years?
Maybe I'll go first. I personally feel crypto will be the next big thing, especially in Singapore. I mean, I got to say is, right now there's a lot of talks about PSA. There's a lot of talks about crypto trading. I got to say is, in terms of the upcoming, there'll be a lot of cryptos, license. That's how I personally feel. Some companies will be still getting their cryptos and and from there, I mean, based on our statistics over here, there's around 20% Singaporeans who are trading crypto and have crypto in their portfolio. So how I personally feel it will be the next upcoming big thing. And of course, when I talk to some of my friends, personally, I feel that there's a lot of building in terms of technology using blockchains. How I'm seeing is, we may be also seeing products that embrace blockchain technology. And that's how I see that. And of course, for us, we are also seeing many clients who are actually very keen in those. So we are also linking out with working with many vendors, and we are talking about collaborations on how we can provide this, getting this product, and also talking to the regulators to providing these products to the clients itself.
All right, thanks, Gavin. Amanda, what are you looking forward towards?
So I think based on what we've been hearing from our clients, I don't see kind of brokerage or DIY approach to investing and having a digital wealth manager as being kind of independent of each other. I think over time it's something that can be very complementary. So I mean, even for your typical trader who enjoys day trading, they may wish to have a core part of their portfolio in kind of a passively managed by a digital wealth manager. So I think for us, it's something that we are also looking at, meaning potentially offering a little bit more customizability to the portfolios. I think that's something that a lot of our clients are looking forward to, and it's something that we are looking at in particular for ourselves.
All right. Perhaps another question. Sorry, go ahead.
No, I thought I'll take a dig at this. We're very close to the lunar year, and that's the time predictions are made quite heavily. So I won't profess to make any prediction, but trends to look out for. I think the sentiments are going to play an important part in the coming year, at least. COVID is into the third year. There is inflation concerns. There is volatility in the market. So all this will play on the sentiment of the investors. Whether they're looking for different products, asset classes, or some sort of an advisory that's going to come through. Purely from an ecosystem, I think we touched upon it. I think that area is going to continue to increase. Fintechs have done very well to create a great user experience. But what about the backend? Today, people can provide fractional trading, but where all can that go in terms of, let's say, decentralized finance, DeFi you spoke about, embedded finance, etc. So I think those will be the things to look at. Convergence in terms of platforms offering multiple products, like what Revolut is doing with the financial super app. I think that's going to be a key trend to look out. I think just for us, Revolut is keen and is looking at getting into the wealth space. So we will be looking at 3 products, which is stock trading, commodities, and crypto as some of the things to bring forward to in the market.
I think I'll just start with Thank you. I think I'll just start with the macro trends. Like we have all heard about, the Fed has already shown its hand of the tapering measures, and there are certain sources closer, certain people of knowledge close to the source saying that the Fed may hike up interest rate 4 times in the incoming calendar year. So volatility is definitely going to increase, and because the lending cost, the borrowing cost has been so low, you're probably going to see some of those money slushing around slowly start to dry up. But that is, of course, a very US-centric point of view. When you look at kind of like places around the globe, lots of places are still kind of like in double-digit inflation, and at the same time, often come with is double-digit unemployment rate. Turkey being a prime example there. So people are going to continue to look for investment opportunities that give them that return that at least kind of like just keeps the money in their pocket instead of letting it to burn a hole. And we really think that our digital property, digital ownership is going to see more and more purchase, simply because like when you look at even just a longer term, I'm staring into my laptop right now and just think of like this amazing piece of aluminum and glass, what it's able to do. Imagine like a 1950s desktop setup. You would have a Rolodex for the phone numbers. You would have a name card, kind of like a tray, and then you would have a calendar. You would have pen. You would have a notebook and everything. And all of those are not now combined in this piece of digital hardware and software, and we are just seeing this increasing speed of things in our life getting dematerialized. That would include the work setup. That would include music. That would include video content. When we were growing up, we were listening. I speak for myself, listening to music from CDs and watching stuff from DVDs. But you can reach your audience, the first 2 billion audience, perhaps using kind of like a physical medium in order to reach the next 2 billion, or to reach the rest of the world. You actually need to dematerialize that. And then we really think the rise of digital cryptocurrency and all that, and NFT and all that. It's a digital certificate of ownership and digital property that you can keep in as asset. For people in more kind of like stable economies, that could act as a safe haven asset, that could act as a speculative bet. But for people who are living in shakier kind of like economies, such as, say, for example, Myanmar or Afghanistan, when you want to escape from the country, you cannot take your house away. You cannot find liquidity for a house, for a car immediately just to move it with you. The only thing that you can take with you to preserve your wealth is cryptocurrency. So we really think, more and more people are going to realize that, and we are still really in such early days with the adoption, that this is kind of like the long-term prediction that crypto really, and digital ownership, digital asset will really be the story going forward.
Right. As perhaps as unappealing as it is, we can't talk about finance without also talking about regulation. How do you see the future of regulation and regulators' relationship with builders and workers such as yourselves in this space affecting the future? Each of you are involved in various markets at once. What are your insights into regulatory behavior or trends moving forward?
I think maybe I'll just jump in here. So for us in Singapore, we were actually the first digital wealth manager to get the CMS license, so the Capital Market Services license for retail fund management. And this is one of the more stringent licenses to get in terms of management team experience, audit requirements, minimum capital requirements as well. And for us, we found experience with the MES kind of being very kind of consultative. So they were definitely very open to kind of hearing our kind of point of view of how they should evolve the relevant regulations at that point in time to obviously fit a very new kind of wealth manager that is very different from your traditional asset managers, right? And that, so far, I think we've been very lucky to have built a very positive relationship with MES. In all of the countries that we operate in, we have seen very similar experiences as well. So, we operate also in Malaysia, in Thailand, in Hong Kong, as well as the Middle East, where we operate out of the VIFC. So, as you know, we all operate in a very highly regulated environment. And, this has always been key for us, building and maintaining very strong relationships with the relevant regulators, and also making sure that over time, that we look to kind of improve regulations as we try and innovate as well. Because we're looking to add new products that right now may not be available for us. So for example, if you're looking to, as a fund manager, offer cryptocurrencies in Singapore, it's not something that is very straightforward. But it's something that we are kind of speaking to the MES and exploring with them as well. So I think it's going to be a very similar experience across all of the countries we operate in terms of putting it out there and making sure that it is a very cooperative and consultative approach with their respective regulators.
If I can go next, Shane, just from my perspective, I think we are fortunate to be in Singapore, where the regulator plays a twin role, not just to regulate or govern the industry, but also to develop the industry. There is a very positive, immense partnership that the regulator brings in. You've seen Singapore being positioned as a fintech innovation hub, as well as an international wealth center, and all this couldn't have been without all the work that's been done. So as new asset classes, new products are coming in, you expect that partnership to continue in different parts of the world, to make sure that there is a proper development of the industry and to regularize some of the asset classes. So that partnership should continue, from our perspective.
All right.
Yep.
Sorry,
Yes,
Gavin. Go ahead.
Yep. Sorry, I mean, if you don't mind, maybe I'll just share a little bit more. I think, yes, I totally agree with the part and Amanda. I think I got to say, if we talk about even for Futu working with MES, I got to say they are very forthcoming and they are very welcoming in terms of embracing a new technology. So, there are many licenses that we are actually getting, as much as we also had received our CMS license, but we are also in talks with MES to get more license. I got to say, generally, is the same as what Amanda has shared. It's very important, in terms of regulators and even on business side, even as a company where, both sides will understand each other and, see on the different sides and different points, and from there work out our business. And I'm going to say, I got to say, is really thanks to the support of MES and even some of the exchanges over here. That's also one of the reasons that why Futu Singapore is growing so fast. And, as much as we would like to bring out technology and, even MES did share that if there's any way that we would like to test out more new technology, there's a sandbox project that is going on. And if we want to get our R&D people to come down, and there's always grants that they are helping us. So I got to say, these are all good examples on how we are showing the whole world that how Singapore is embracing technology, and showing that we would like to be ahead of technology.
Yeah, for sure. A question again for all of you. A lot of your businesses and your products are very retail customer focused. Moving into next year and perhaps 5 years ahead, what is one thing that will change about the retail fintech market, and what is one thing that will remain the same?
All right, I'll give it a shot. So one thing that will change, and one thing which will remain the same, I think what will change is the fact that finance is getting more and more embedded. So you don't have to leave what you're doing as part of the journey. When you are shopping for food, you can pay for it then and there. So can that be applied to other areas where you're looking for, let's say, education, and you can start looking at education savings and stuff like that. So how can your financial needs be fulfilled embedded in a journey that you're doing? So I think that's one thing that will be really great that comes along over the next few years. And I think what's going to remain the same is the fact that you've got to be very close to the hearts of the customers. You've got to have a very hyper personalized offering which makes sense with that particular client, and especially as the base grows for the various fintech and financial service providers. How do you stay relevant? It's not a broad stroke of brush you're giving to everybody, but how do you remain relevant to that particular person? I think that hopefully remains the same.
I guess I'll go next. I think one thing that doesn't change is, finance at the end of the day is just the packaging and merchandising of risks. So so long as there are opportunities in the market, there are always going to be people who want that product. And how one company or one operator can differentiate itself from others, of course, is to provide those exclusive, unique opportunities in terms of those packaging of products, but also just like you are a platform that people can rely upon, especially when they most need it, and just keep executing their trades, keep serving them as you promised, and to ensure that the platform never goes down, even during extreme market volatility or market conditions. And this is, trust is something that you need to earn, and you need to kind of have that level of standard and quality that people can come to rely upon. And I guess kind of like, because money is more or less one of the most important thing that you can potentially kind of like have someone parted with. So you always want to make sure that whoever comes to you as a customer always feel that they're treated right and they are never left hanging. And this is something, the customer support and the personal side of things needs to be at the heart of it, even as we become more digitized or become more scalable in the running of.
Very true. Yeah. Inez, a question for you. I'm curious. Singapore's stock exchanges is relatively tame, especially compared to other financial centers globally. Do you think crypto is where Singapore will kind of make a name for itself and have it be our thing?
I think it's definitely something that the regulators don't want this innovation to happen elsewhere. And Singapore has been, when you look at the entire world, Singapore has actually been pretty progressive. Of course, there are ways we would like to see more of an embracive posture from the regulators, but like Singapore has been really quite a dream. And because when we work with multiple regulators around the world, we have the luxury to compare and contrast, and we can really see that. And Amanda was talking about the IFC. We were working with the regulators in Dubai and Abu Dhabi as well. They are really great. I think regulators they also realize that regulation can never be ahead of innovation. Innovation is always going to be first. In some cases, when regulators truly do not understand the innovation, it may take quite a while for them to catch up. But I think sort of on first principles, what we are actually quite aligned with regulators is that we want to protect our users. We want to protect our clients. We don't want them to run into any scams. We want them to feel that their money is safe and it's doing the work for them. And we also want this industry and its innovation to flourish, which I think is what the regulators want as well, because this provides jobs, this pays taxes, this adds value to the overall society. So it really comes down to how do we do that, and what is the approach? I think this is where it takes a lot of just kind of coming together and just trying to understand where the other party is coming from. Lots of times when a regulator uses a piece of legislation from 40 years ago, or sometimes even 70 years ago on something that's completely unrelated to use on this new internet phenomena, this new blockchain phenomena, it's showing its age, and really hope that regulators see that for this new phenomena, sometimes you need to look to a set of new tools. And we are actually very keen to work collaboratively and establish productive dialogues with them. So currently we are in the process of applying for licenses in more than 20 jurisdictions. And then, those conversations are very, very interesting. And you can actually see many of the regulators, of course, they want to appear tough, and they want to kind of show that they have a very steady hand. So they kind of really want to have that stance, but at the same time, they also don't want this future of money, future of wealth happen elsewhere. They want it to happen here. So it really comes down to how can you help them understand where you're coming from, and educate them and give them the kind of tools and the necessary information, the necessary knowledge to ensure that whatever framework comes, it comes with clarity, and it comes with actionable items. Because regulation is actually great, but if we only have kind of those signaling and posturing, but don't have the clarity, it's actually very difficult for anyone to operate in. And if be it regulators or industry people who just always look at kind of a couple of scary headlines garnered by a few bad actors in a industry, and just decide the entire industry based on that, I think that's premature and not fundamentally helpful either. So I think just lots of conversations, lots of dialogue, lots of education, and just keep an open mind is going to be great for all the stakeholders involved.
Great. Now we're closing this segment and moving towards to our Q&A, which will be quite exciting. We have a lot of questions. We have several questions that are very practical, and which I'm excited to hear your thoughts about. We have 4 very fine financial minds with us now. So question is, with the macro conditions, in light of macro conditions, what the Fed is doing, quantitative tightening, etc., what do we do with our money? And I'll do the disclaimer for all of you. None of this is financial advice. Do it at your own risk. But yeah, what do each of you think about what's the smartest thing to do with your money now?
Maybe I'll just start off. So I think with regards to the Fed tapering, I think that's something that the markets have already been kind of, it's been well known in the market for quite some time now, and a lot of people would say that's pretty much been priced in. I think in general, I guess, as you know, with Stashaway, we're not for market timing. So, and I think COVID has definitely shown us kind of the dangers of trying to do so, or kind of being overly focused on any one particular sector or country. So I think even with COVID right now, we can see new variants coming up. Something like Omicron can happen that puts countries back into lockdown. Businesses are heavily affected as a result of that. So I think now it's more important important than ever for people to think about having a very diversified portfolio that is not concentrated in any one particular country or sector, but making sure that it's very globally diversified. For a lot of people in Singapore, there is always this tendency to, or I guess anyone in any country, there's a tendency to have that home bias or being very overly invested in your kind of home country's stock market, for example. And if you think about it, there is quite a large home bias, right? You're working in the country, you're living in that country, and you're invested in the local stock market as well. So I would say for everyone that's looking to or how they should view their portfolios, definitely make sure that they try and keep it as globally diversified as possible.
Cool. Question for Deepak. One of our attendees uses Revolut personally for disposable virtual cards. How is Revolut making money from this offering? And is there a risk of disruption from new card offerings involving crypto, such as crypto.com?
I'll be quite upfront. I wish I knew the answer to this question. I don't think I'm the best qualified to answer in terms of the disposable card. Obviously, it has a great purpose, which is that if you want to use a card on a online exchange or for one-time use, you could use that, and Revolut wants to provide that. But going to the mechanics of how does Revolut make money, I don't think I'll be able to provide that information at this point of time.
All right. Thanks anyway. On a similar vein for Gavin, these are people just curious about how each of you make money. Last year, Moomoo provided free stocks for inviting users onto the platform. An attendee's friend made $3,000 just by using this opportunity. How does Moomoo make a profit from doing this?
Actually, I've been replying this question for thousands of times. So I think very good questions because, first of all, other than $3,000, we have clients who make, I don't know whether you believe in terms of Hong Kong markets, some of them, I can't reveal too much, but it can be in the area of millions of dollars. But the good thing about, for us, first of all, I just want to share, for whatever trades that is, clients is trading is all routed to the exchange. So, whatever clients earns, it's not towards Futu, it's actually routed towards the exchange. So we call it, straight through processing, STP. And, from there, with that STP process itself, whatever clients make or loss, I'm going to say is how Moomoo earns is actually from the commission. So the next question, okay, maybe this will go a bit deeper, is that if Moomoo charges such a low commission, and how is Moomoo's going to make money from there? Based on our quarter reportings, Moomoo, or rather Futu as a whole company, we make, this is our 9th quarter in terms of profitability. I'm going to say generally, Futu or even Moomoo itself, we don't see ourselves just at a fintech brokerage. We are actually in Hong Kong, we are doing a lot of IPOs with other companies. You will be surprised, in terms of our side, very strong marketing. We are helping clients to do their investor relation, or even some of the companies, they want to do more awareness. These are something that we are right now doing. And interestingly, if you look at Futu itself, we embrace a lot of big data. There's in big data, there's a point of text analysis. Means to say is that based on what clients want to see, or what clients has traded, or what clients has said inside the Moomoo apps, we will be able to, from there, know what clients would like to see more. For example, right now, we, based on our statistics, daily statistics, we are seeing more and more clients trading tech stocks, and how we are able to bring the tech companies to give talks. So these are in other ways that I could say is, even me, myself, as a Singaporean, innovative ways that even for a traditional brokerage, which I had been quite a few, has never seen this before, because we are talking about how we can bring, all the way from, front, getting companies to be listed, helping them to do IR towards, getting clients to trade. So this is something that we are working very closely to with SGX. I think one of your questions is, in terms of trading volume, etc. We are working very closely with SGX how to make this, exchange or even this place to be a little bit more lively. In Futu, I got to say, we also have, different people from different countries, from Hong Kong. I got to say, if you want to compare Hong Kong exchange and Singapore, there's a lot of things that I got to say we can share. So I have colleagues also from Hong Kong. So these are things that we are doing, and I could say that's how Mumu's make money and make a profit from there. Yeah.
All right, we're also getting some questions about careers in fintech. All four of you here could be you guys have made it. What advice would you give to a aspiring fintech builder or entrepreneur, or just anyone who's interested in the space and working in this space?
Maybe I'll share a little bit more. Just a quick one. I'm actually the first employee in Futu Singapore. So I got to say, I'm the one who set up Futu Singapore, and one of the criteria is you must be very passionate. There's a lot of roadblocks, and with your passion and commitment, the never say die attitude. I know right now in terms of many people would want to have a work-life balance, but for me, I always feel that if I contribute more, I learn more, and from there, even I got to say, every day I'm still learning something, and I'm learning from everybody over here. So if someone who is keen on the fintech industry, I got to say be very open to getting your hands dirty, and sometimes you just got to, in terms of from ground zero all the way to the whole chains, one will need to cover everything. Yeah.
Mm.
And if I can add to that, so I've worked in traditional banking. I'm now in fintech. I think all I can say is that what really matters is your cultural mindset, and that takes you a long way in your career path. So if you're somebody who takes ownership, who's a problem solver mindset, never settles for the first level answer, can dig deeper and find solutions to different problems, I think that's going to make an exciting career for you, especially in the fintech space.
We have a question, one for Stashaway and one for Amanda, and one for Deepak. Amanda, I think you touched briefly on this just now, but what are Stashaway's plans for crypto and possible crypto offerings? And for Deepak, does Revolut have any plans for the BNPL market?
So yeah, maybe I'll go first. I'm always waiting for the token crypto question to stash away. Every single webinar panel I do, I'm just waiting for that token crypto question. It's definitely something that's come very heavily requested from our clients. Obviously, we've talked about it quite extensively. There is a lot of demand for it in Singapore for sure. It is something that we're looking at. I mean, on the regulatory front, MES obviously does not currently allow CMS licensed fund managers like ourselves to actually kind of trade cryptocurrencies, but it is something that we are looking at exploring. So kind of never say never. Obviously, if you look at our portfolios, we do maintain very traditional asset classes, but it is an allocation that we are exploring.
Right. Also, Amanda, when we have you, another question that just came in is, what advantage does Stashaway have over traditional banks that may have their own version of robo-advisors?
Yeah, so I think that's a very, very good question. So, I think for us, since kind of when we first started, it's always been a huge focus on innovation, right? I mean, when we first started, it is, our CEO and co-founder Michele actually started Stashaway because he wasn't very happy with his experience banking with the traditional banks. And so he was looking for a digital wealth manager in Singapore. At that point in time, there was none. To answer your question specifically, I think some of the key advantages here is that, if you look at our UX and UI, it's something that we're very proud of, not just against the banks, but against a lot of our competitors. It's something that we're very proud of. We do invest a lot in product and tech. So they make up about half of our payroll is actually our tech team. And so a lot of kind of resources go into things like user testing, client feedback, reiterating and improving the product over time. But maybe to give you more of kind of one specific example of how we leverage technology as a competitive advantage. For us, when we do rebalancing for our clients, we actually do it on a daily basis. So we check your portfolios on a daily basis. If you move beyond a certain threshold away from your target allocation within your portfolios, we automatically rebalance it for you. It happens in the background. We don't charge you any fees for it. You don't, it shows up in the transactions in your app after that, but there is no restrictions of, whether you have to stop doing something or stop depositing or withdrawing when that happens. I'm not going to name names, but the experience rebalancing with some of the robo advisors that the banks have is a little bit different. So they actually only, one particular bank actually has a robo advisory offering where they do rebalancing only on a quarterly basis. And when you do the rebalancing, you actually can't deposit or withdraw for a whole week. So I think that just kind of highlights there kind of the difference in the level of technology and sophistication behind that technology. So I'll just kind of leave it at that.
Interesting. Deepa on BNPL.
Yeah, so we don't have the BNPL service in Singapore, but clearly as an industry observer, because I won't speak on behalf of Revolut at this point of time here, it's an area to watch out for. It's quite closely associated with the younger segment, and it's getting a lot of popularity. So definitely an area to watch out for.
Ignaeus, does Bybit have any NFT plans?
Yes, actually, Bybit's NFT marketplace is coming online this week. It's like perfect timing. So yeah, what we will slightly differentiate from what the market already has, with the OpenSea and like the other exchanges, centralized exchanges, NFT market, is that we will go for the unique, one of a kind and exclusive IPs that people can't get anywhere else, and perhaps something that is relevant to people of our age, kind of like things that were important to them when they were younger, so kind of like their sentimental value and so on and so forth. And we really believe that NFT as like a digital certificate of ownership on a blockchain that's irreversible and immutable really can help a lot in the kind of like collectible market, the art ownership market. Even though when you first start with something, it's very messy and lots of NFT markets. It's a lot of kind of like noise and a lot of things that doesn't really have any value if you look at it from a long term. But what we really think is this technology is great in the sense that for the longest time, the two of the biggest problems with the collector's market is that, first of all, how can you authenticate a piece? And then secondly is how do you kind of verify the chain of custody from the inception of the piece to the moment it passes, it came into your hands. Maybe it has passed through some unsavory characters. Having that transaction record on a blockchain solves both and really can help with not just kind of like NFT as digital art that as we currently see it on, say, like OpenSea, but it can really disrupt kind of like the entire collectible and art market that has a much larger market cap as well as total addressable market. And NFT has lots of other kind of application than just a piece of interesting art in your wallet. Nowadays we're seeing more and more blockchain gaming companies, basically, like for the longest time, even if you spend like 40 hours, 80 hours on a game, you get all those like rare equipments. Those are still owned by the gaming company. If they release an update, all the rarity of these things, or like the technical, the specs of those things could change. Whereas nowadays, especially with Axie Infinity, and we're seeing more and more companies, the gaming companies, decentralizing the ownership of those in-game assets. Instead of the gaming company decides the rarity, the gaming company decides it will deposit into your account or take it away. Now you have it as a immutable NFT that people can even trade on secondary market, that really allows people to have true ownership of the time they spent on a game, a piece of content that they actually spend time and energy on. And in the future, maybe people are even able to use the NFT as collateral to borrow. So all these are interesting thought experiment or potential prototypes that we can see coming in the next 12 to 18 months, because things in crypto happen really fast.
Yeah. All right. And with that, we've come to the end of our symposium on fintech for personal finance. We've had a robust and insightful conversation, and I hope everyone has learned as much as I have in this short time we've shared together. I'd like to thank our panelists for spending time with us this evening. NUS Fintech Month and NUS Fintech Society is proud to be partners with Bybit, Futu Singapore, Revolut, and Stashaway. We look forward to continuing to work with each of you on future opportunities. To the attendees, if you haven't already registered for other workshops, please scan the QR code or visit the links shared in the chat. Do come for our other events. They will be hopefully equally exciting and insightful. Once again, on behalf of NUS Fintech Society, thank you all and have a great and wonderful year ahead. Take care.
Thank you.
Bye-bye.
Thank you.